Hi crypto fans, welcome to CCS Cryptocurrency State. My name is Santiago, I'm a web developer and investor. And in today's video we are going to review the price of the Bitcoin. We are going to check some different possible price action plans. We are going to check again the stock to flow model to see where we are and many other charts that can tell you where we are right now in the bull cycle. Before we begin, please like the video, subscribe to the channel and click the bell to get the notifications. And without anything else, let's go into it. Hey guys, first of all I wanted to start with this chart. This is a weekly candle chart for Bitcoin USD. And you can see here in a big picture we are going down here a little bit, but for me it's nothing to worry yet. I hope that $60,000 keep a support. That will be very important. But we have this fractal that I saw other YouTubers and analysts actually speaking, which is that we are near to break this resistance on the previous all-time high here on this week. And if we have support about that, then we could see the new rally leg happen here. You can see how we get the previous all-time high. We had a dip, a recovery, go down, and then we hit the previous resistance here, and that fractal could be happening here. The last all-time high made here, we went down here into this dip, then we have a recovery, a retracement, and then we are hitting again the same level here of this week. So if we break this and hold it as support, we already create a new all-time high here, so that was great. But we need a weekly candle above this, and that could trigger actually the rally. There are some similitudes between these two fractals. So we are saying that in regarding this fractal we could be here, and then you have all this uptrend to go. And if that is the case, that we are at that point, then we can go parabolic here again and see a price above $100,000 if the fractal repeats itself. So that will be great. So in a big picture, in a big schema, we are very good right now. Looking the 4 exponential moving average, we are not even touching the 20 exponential moving average on a weekly time frame that could act as support during a parabolic uptrend. So we are not even near some support areas for this weekly chart. We really just went a little bit down on this big picture, but that is not too important now. The stochastic RSI crossed it bearish, but we could still go into this sideways. We need to wait and go below 80 to confirm this bearishness, because if not, then could be something like this that happened here. At this same level, we were completely overextended on the weekly stochastic, but we have some fake outs here and we continue the parabolic uptrend into this local top that we have. So something similar could happen. So until we cross below 80 here, we cannot confirm this bearishness on the stochastic weekly. So the same happened here regarding the moving average. These are the simple moving average. The 21 is the most important on a weekly time frame. I mentioned many times that that could be decisive, and that happened here when we break that down. Then we have this small, not bear market, but that small consolidation. So in order to be bullish, we always need to be above the 21 weekly moving average and also above the 200 daily moving average. And you can see here that that level is actually at 49, almost 50. So we are really above that. We probably in a bull run will go back and test that, but this could be or not the case, but still this downtrend that we are having is not too big. We need to see some levels that I will mention. The mass index is still very low, so no signs of overextended here. We are starting to go a little down here in volume in the MACD, but we didn't cross yet, so this could revert very quickly. And then in many other indicators we are really bullish. We are really far away of the Gaussian channel. The TD sequential went into 6. I'm pointing a bearish 1 for now, but this week just started, so we need to wait what happened. but we can continue with a couple of more red candles maybe. According to this could be a starting point, but the weekly alligator is very bullish right now. It's not trending down, not for 1 millimeter, so this is very bullish, all in weekly time frames. So in order to start to be bearish, you really need to wait at least the close of this candle and see what happens. But for now, the weekly time frame is super bullish. The same chart in a daily candle is a little different. We are seeing the alligator started to turn bearish here. We need to wait for these crosses. There could be a lot of fake outs on these crosses on the alligator, but usually when there are straight lines and the green one is above, that is bullish, and if the blue one is above, that will be bearish. You can see those scenarios here. Also coincided with this Gaussian channel, but we are still bullish here. The second candle here, this daily candle, just entering into the Gaussian channel but quickly went up. So we need to wait this close candle actually to say something more about that. It is sequentially marking bearishness, but that doesn't mean too much right now. One really cool important thing here is the rebound, the exponential moving average rebound here on daily candles. You can see how we managed to hit exactly the bottom of the river here at 58,000, and we are come back in here. Tomorrow when you see this video, we need to see what is the price action, but maintaining the rebound as support, like looks here, is very bullish. And you can see here in this time frame, each time that we break below the rebound and close a candle, that is bad news. You can see here this consolidation and all this downtrend that we had before. But being above the rebound and held it as support, you can enter into the rebound and bounce up like we did here. So until you see a candle close below the rebound, I would say 2 candles, one surpassing down the rebound and then another candle closing, then I don't think you need to worry about anything here, because right now it's acting as support. But let's see tomorrow when we publish this video. In this daily candle also you can see that maybe the downtrend that we have, which is not much really, could be because of these bearish diversions. The price continue going up here in the price action, but the RSI was low, so the momentum was starting to be loose. The same with the stochastic RSI, so maybe this downtrend corresponds to the play out on these bearish diversions. We need to see, but if that is the case, that will be very bullish, because now we can recover some momentum. And this also is resetting a little bit our RSI and stochastic RSI, which are momentum indicators. So that will be very good. Also, the 4 exponential moving average are holding really nice support here on the 50, so nothing to worry right now. These are continue marking bullishness in the market. If you remember my videos about this buy signal and the hash ribbon, always the hash ribbon has been a very great opportunity to buy Bitcoin. This only works for Bitcoin because it's very correlated with the mining of Bitcoin. But you will be buying around $43,000 at that time. Even if with this correction, you will be in 20,000 above from the price of Bitcoin at this buy opportunity. Right now that is continue playing out, so no news about the hash ribbon here. The Bollinger Bands are not telling too much, are starting to contract this. If that happened and we held a very tight neck, that could lead to a very explosive move. Of course, you need to see volume with the Bollinger Bands in order to predict something. But right now, we still need to wait a couple of more daily candles. In terms of support and resistance areas, well, we are right now at 60,500. A very significant level here is $60,000, around that exactly. $59,000-$60,000 was resistance and support before, so also it's a very psychological important level. Below that you need to see $56,000, a lot of confluence there also, and also was resistance and support here on this uptrend, so it's important. Then we have this 382 Fibonacci extension at the 53, and after that we enter into this green zone, which means that there are many levels there for support. The most important one is the 0.5 Fibonacci extension at 49 here, and below that, well, we need to see a lot of lower levels that, but I don't think we are going to see all those scenarios right now. Before we continue with the video, remember that I am doing an amazing giveaway. I will be giving half of a Bitcoin to one winner and 5 Ethereum to 5 different winners. If you want to participate, it's super easy, just a couple of clicks. Follow the link in the description. But remember that you need to be subscribed to the channel with the bell on to be considered. And I wanted to show you a couple of comparisons between previous bull runs. This is a very nice chart. You can see here the first bull run of all, 2011, 13, 17. In all these peaks, you can see the correlation between these four indicators: the RSI, the RBA, which means also some momentum on the chart. You can see all the peaks and correlations in this chart. In these three, you see the peaks above here and holding resistance of these green lines. And here for the vortex indicator, you can see that we enter into this green rectangle. So when you bottom here, that means that you are probably something about some kind of top on the chart, on the price action. And we can see the three correlations on this stochastic RSI also. When we are overbought here, we are on the low part of the vortex indicator. So something to consider is seeing those movements here on 2021. Actually, we hit those levels here in May. You can see here on May price where we reached the $64,000. We hit these targets exactly on all these indicators. But we can say for sure now that that was not the top of the bull run, because we already created a new all-time high and we didn't plummet below these levels. It was a very big retracement, but could be like it was in 2013. I think it was similar to this retracement pattern. And then we have one more big leg to go up. So checking this time frame, this graph, this chart is very interesting because coincide with all the big movements. And you can get a lot of knowledge about this, of when the new peak could be. Another thing to compare here between the different bull runs is the different things that the Fibonacci extension are marked. And in these three, you can see that after we broke above the 1.618 Fibonacci extension, we had the most big rally part of each of the bull runs. So some speculations are about that. The 1.618 is a very important level on the bull runs, and we could be just below that right now. So if we break this level, we go about $66,000 and we held support, then we could see the most rally part of the bull run. And that also will coincide with the Plan B prediction of 98K for November. He posted this in November 14, and he said that these predictions are still in play. And the stock to flow model, we can see it more clearly here. It's already on these colors, which are green, so we are just below the line that should mark the very important hype, quick and very important price action hype here. We need to go from the green to a little more light greens here, and that will mark the last part of this bull run. So this is still to come. It's not here yet. We can see another very important charts about that. The 200-week moving average heat map. That is always reference the distance between the 200 daily moving average. Weekly moving average, sorry, not daily. This is the weekly. And you can see that we are in the blues, so we need to go into a green dot in order to start forming the new part of the new leg of the bull run here. One important chart that I like to see, and I recommend you to keep an eye on this, is the Pi cycle. This marked the top on May, exactly as the indicator say. That was part of why I really thought that we were having a top there, and I saw some of my positions making great profits. This indicator marked the previous two bull runs here, 2013, 2017, with 3-4 days of accuracy. So once this line crosses above the other, that means that you are 3 or 4 days after the peak of the bull run. And this was the first time that worked after the creation with the data and worked perfectly. So I will consider a lot of paying attention to this chart in the next months. Right now we are really below the levels that we need to be worried, so we are not in a bull top, but this is something to consider and see. Also, the golden ratio multiplier, we are really neutral here. The same with the Bitcoin logarithmic growth. We still have a lot of room to go upside. Right now this is at $1,040,000 around. That is the peak that is marking. And the Bitcoin investor tool is also a really cool tool that I will be using to mark some of the peaks. It's not only to be above the red line, but it's also a good strategy to sell on the way down. So in 2018 you will sell a little bit about here after you reach the peak, but it's a very safe area to sell, but you are mostly known that you already reached the peak and it's not a fake out or something like that, or you could see some movement about this red line. So putting some positions to sell in the cross going down is a good strategy too. And lastly, the crypto fear and greed index. We are in greed now. It's a good thing to cool a little bit. We were extreme greed from last months and weeks. So this downtrend could be nothing or could be a more potential downside. We need to wait. But for now, we are still very bullish in all time frames. Well guys, that is all for this deep analysis of Bitcoin price. Remember to like the video, subscribe to the channel, click the bell to get the notifications, and I will see you tomorrow with a new video. Bye.